Hello everyone, thank you for joining us this morning and welcome to this educational presentation of a simple strategy designed to buy low and sell high. Now, I know a lot of students of mine always have difficulty when I present this webinar where they say, wait a minute, Steve, I thought you always tell us not to try and pick bottoms or pick tops, and right now you're telling us that you have a strategy that's designed to buy low and to sell high. Doesn't that go against your entire philosophy or the concept of what you teach about trading? Well, actually it does, but there's a few things that we're not including in this which will actually allow you to buy low and sell high. For example, let's look at this chart right here. Here's an older chart of Apple. Now this is a perfect example of what most traders would say, or students of mine that say, Steve, we're going down here very strongly. There's no reason why I should buy, right? In fact, you always tell us that if something is in a strong uptrend, we should buy. And in this case, if it's in a strong downtrend, like you see, you should be selling. We shouldn't be looking to buy here. And that's true. But what if I told you simply by adding a small tool that even though we had this sell-off here, this was actually in an overall uptrend? Well, actually this was. If we look at it going into the future, we were in an uptrend the entire time. And this tool would have told you that even if you bought on these sell-offs, you were not going against the overall trend. As an example here, with this first initial sell-off, this particular strategy and method would have generated a buy signal. And then in this second sell-off, it would have generated two buy signals. And then lastly, in this sell signal, I should say, this sell-off, it would have generated another buy signal. So had you taken the very first setup, you could have potentially captured 38 points in 2 months. So where it looked as if you were buying low and selling high, you were actually buying low within an overall uptrend. And so I'm going to share with you a couple of the rules for this particular method, and you're going to see all the examples today are from displays on our PTS Primo Charting platform. This is the educational platform that actually teaches you how to buy low and sell high. So welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. And I'm really excited about this method. It's really only about a year old, but it has generated some amazing results that students have given back to us in testimonials. And it really works in all markets and all time frames and all directions. The basic core of this is we're looking for an overall uptrend or downtrend. And then let's say we're in an overall uptrend. We're looking for a sell-off in that uptrend, and then for specific requirements to be met so that we can buy. And if we're in an overall downtrend, we're actually looking for a little bounce with specific requirements to be met so that we can sell with that bounce, okay? Now, I've been trading for roughly 43 years now. I started my career on the floor of the Pacific Stock Exchange. I was a specialist on the floor. If you're not familiar with what a specialist is, that's someone who makes markets in roughly about 50 or 60 stocks. So let's say you wanted to buy or sell a particular stock, let's say IBM. Well, you would give your order to the floor trader who would walk up to the specialist or the trader who specialized in making a market in that. So that's what I did for roughly 9 years. I was a specialist and made markets during the crash of '87 and the bull market that followed. I've traded straight up, straight down markets, sideways markets. I've traded just about every environment and just about every strategy or system you can think of. So in my 43 years of experience, I know what works in terms of consistency and I know what doesn't. So why waste your time spending all your hard-earned work and all your research, and most especially your hard-earned money, and searching for that holy grail when it's really right in front of you? It's sound fundamental education. I can share with you in my 43 years techniques and methods that have stood the test of time that show high levels of consistency. So I know many of you have probably purchased these $10,000 methods or courses, and maybe they work for 1 or 2 good trades, and then after that, they don't work at all. Well, that's, unfortunately, the main reason why I believe most traders fail, because you're investing your hard-earned money and your time in things that really share and show no levels of consistency. So this is what we provide. We provide you with sound fundamental trading knowledge so that you can be in charge of your own trading destiny. I'm going to share with you a great method. I'm going to, at the end of today's presentation, give you a great offer to become a member of this course with a great discount. But before we begin today's educational presentation, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular method. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also remember that all examples are strictly for educational purposes only. So as you're taking a moment to view our disclaimer, Once again, I'd like to invite all of you to follow us on Twitter. There's our handle right there. You may want to copy that down. I post different educational information daily, anywhere from little bits of financial wisdom to signals that our strategies have generated. It's all educational. It's all there for you to learn and to see what we do. So please feel free to follow us on Twitter. Now, as I stated in the opening statements, we are first and foremost an educational company. This is an educational presentation. And once again, people say, well, Steve, why are you trying to educate us? Why don't you just, give us the signals and tell us what to buy or sell, and we can go from there. Well, think of it. The entire industry, I've said this before, is based on that premise. You simply go to a website or take a course and you have a system that you purchase that automatically spits out buy and sell signals. Now, what that does is it automatically, at the same time, takes you out of the game. You are no longer a part of the process, okay? Now, to me, this is a recipe for disaster. If this, premise or concept works so well, why is it estimated that 85% of all traders fail? Why do most traders fail? I think it's because of this simple fact that you're taking yourself out of the game, and the entire industry is based on you being out of the game. And don't worry, we'll provide, or the system will provide the signals for you. This couldn't be any further from the truth. You should never trade this way. Think of an airline pilot who is asking other people, what do you think I should do? Or what do you think is the best way to trade? But traders do this on a daily basis. You're always looking for information. You're always looking for someone to tell you what they think of the market. We never do that at Specialist Trading and Pro Trader Strategies. We don't believe in chat rooms. We don't believe in just force feeding you signals and telling you what to buy or sell. Our goal as your mentor is to teach you how to trade with a specialist edge. This is the same way I was taught some 4 decades ago, and what I believe has sustained me. And this is the only thing, in my opinion, that will sustain you. Sound fundamental education, teaching you with different variables for entry, exit, and stop placement, and then letting you decide, not having to go anywhere else or wait with bated breath and see what the pundits on TV are saying. You know what you want to do. You never have to rely on anyone or anything else. This is the specialist edge. So this is what we try and instill in all our students around the world in over 115 countries and in every state in the United States. So we've got some great testimonials, so it appears to be working with the majority of our students. Hopefully you'll be able to trade 30, 40, 50 years down the road as well. Now, this is going to be an educational class today, so I want to take as many questions as possible. But if you're new to my webinars, I like to take the questions at the end. This way we don't have to bog down every slide with a question and wait, and be finished in about 2 or 3 hours. I don't want to take all your time of Saturday morning. So if you have a question, please write it down or try to remember it. I promise I'll get to it at the very end. The only question I will answer is the most common, and that is this being recorded? Yes, we will provide each and every one of you with a link to this recording at the very end so that you can study this presentation as often as you like, okay? All right, with that stated, let's begin today's educational class. So, what is this simple method designed to buy low and sell high? Well, it's pullback strategy number 9. The pullback allows us to buy low and sell high in an overall uptrend or downtrend. So let's talk a little bit about what a pullback is. If you're not familiar, a pullback looks for an established trend, as we see here in this generic chart. But then, as we know with most trends, they don't go straight up or straight down. We run into a little resistance here, a little back and forth. Where most people would say to themselves, well, this must be the top. We've run out of steam. We're most likely going to come all the way down. Here's where all the institutions are selling. This is where all the Fibonacci resistance comes in. A pullback trader looks within this bracket for some more requirements to be met because they realize that this is just a pause or a pullback phase on this sell-off, and this is where you want to buy. Because if all the requirements are met and it looks like a pullback, most likely the trend will resume. So you want to buy at these low prices right here. This is why we say in an overall uptrend, you can buy low. Now, it works the same way with selling. For a sell signal, what you're looking for is an established downtrend. But once again, no trends go straight down. Usually you run into a little resistance right here. And this is where most people think, well, that's a double bottom. You have to buy here. And this is where all the institutions came in. This is where all the banks are buying. The volume is confirming it. So I want to buy. All right. But a pullback trader realizes if all the requirements are met, this little bounce here was actually just a bounce in a little bracket. And this is where you want to look to sell. So this is a pullback sell, but remember the requirements need to be met in order for you to take it. Just because it's bouncing doesn't mean that you sell it. You need certain rules to be met. And then if they are right, the trend will resume lower and you will be able to sell at a higher level. Now, some of the highlights of this particular method. It's our premier pullback strategy. It's only, as I stated, a year old, but we've already got some amazing results reported back to us from our students. Now, it's designed to trade moderate to deep pullback. So what does that mean? Well, a moderate pullback means that it'll last anywhere from 3 to 5 days of a sell-off, and it'll, price will sell off moderately. A deep pullback means that it'll be longer, maybe a 2-week sell-off, and price will really sell off very intensely. But still remember that you're in an overall uptrend. So that's what it's looking for, a moderate to deep sell-off, okay? Now, because of this sell-off in an overall uptrend or a bounce in an overall downtrend, this makes it perfect or ideal for option timing. Why? Because when price is going the opposite direction and you're looking to buy on a sell-off, well, what happens? The price of the option, the premium goes way down. This makes it advantageous so that you don't have to spend an arm and a leg on buying a call, let's say, but you can't purchase it because it's so expensive because the premium is so high. Well, if the option price comes down strongly on these sell-offs, this makes it perfect for buying calls, or if it rallies tremendously on the bounce, the price of the put will really decrease. It makes it perfect for option trading. Now, another great advantage to strategy number 9 is you can apply it to any market, any time frame, in any direction. So the majority of examples I'll share with you today are mainly on stocks, but it doesn't make any difference. I trade this on E-mini futures on roughly a 5-minute time frame. So any market, any time frame, and any direction. But as with all of our methods, we always require, it's not a suggestion, it's a requirement that all students paper trade first, all right? The reason is because most likely, if you jump in too quickly, you will not implement the rules correctly, and you'll not study it properly, and you'll have a false setup, and you'll most likely have a losing trade. And then you'll come back to me and say, Steve, this doesn't work. I want a refund. I want my money back. This stuff doesn't work. And when I check your trades, most likely you've implemented the rules incorrectly. So always paper trade first so that you fully understand the process. Why? Because our edge here is consistency. Consistency allows for losses. That's okay. But a consistent method is able to recoup those losses. So that's what you should be searching for. Not some webinar. I saw something the other day that was sent to me. I couldn't believe it, where someone had never lost money in the last 10 years, and they had made millions and millions of dollars, and they could do the same for you if you just simply followed their signals. I mean, I always tell my students, if you hear that, you should run, because some of the best traders I know have lost. And there's nothing wrong with that. What you want to do is be able to manage your losses, try to keep them to a minimum, and have an edge in a strategy that's able to recoup those losses. That's what will sustain you. Sure, if you have some $10,000 system that generated a couple of great winning trades, most likely it's going to give them back. And I say this from firsthand experience because I did the same thing. I bought these really expensive systems when I was struggling some 40 years ago. And I had a couple of good trades, and by the end of the month, I usually gave all the money back, and I had given back more. So that's not the type of method you want. You don't want something that promises the world and maybe delivers with a couple of good trades, but then gives it all back. You want something that has a nice 2-step forward, 1-step back approach. That, in my opinion, is the only thing that will sustain you, okay? All right, so let's look at some of the other highlights with this particular method. Now, first of all, let me apologize. I cannot share the rules with you. That wouldn't be fair to the students who have already purchased this strategy, students around the world. It wouldn't be fair. And also, because this is so simple, this is, as the title says, a simple strategy. There's only roughly about 2, maybe 3 rules altogether. And if I gave you maybe 1 or 2 of them, you would be able to, reverse engineer and figure out exactly what the rules are. So it's really simple. Doesn't matter if you've been trading 30 years or 30 minutes. Everyone will get the same basic format. Okay? It generates its signals by employing 2 simple requirements. Now, their relationship to the price automatically will generate the signal. So these 2 requirements, their relationship will automatically generate the signals. Now, in an overall uptrend, buy signals will be generated during a decline or the sell-off. In an overall downtrend, sell signals will be generated during a rally. Now, I know a lot of you are saying, well, how do we know it's in an overall uptrend or a downtrend? That example you shared with us earlier only looked at about 5 or 6 bars. How do we know? It's really simple. In fact, that's the only thing I will share with you today. the 50-period moving average. This must be plotted on every chart, okay? So I don't care if you trade tick charts. I don't care if you only look at weekly bars or monthly bars. I don't care if you look at commodities or Bitcoin. You must have a 50-period moving average plotted, all right? Now, someone will say, well, why do we have to have that plotted? Well, because if price is above, or if the majority of price is above, then you will be a buyer. This tells you the overall trend is up. And then we'll only look for buy setups with strategy number 9. Let's say the majority of price is below. Sure, maybe one bar closes above, but the majority go right back down below again. Well, that's telling you the overall trend is down. We never want to swim upstream and buck the trend. So if the overall trend is down, we're only going to be a seller and look for strategy number 9, sell signals. That's how simple it is, all right? So let me share with you this process with recent strategy number 9 examples. And remember, we're going to share with you all of this displayed by using our PTS Primo Charting platform, the platform that really makes it simple to trade pullbacks. Okay, let's look at this chart here last month in Tesla. Someone looking at this would say, well, Steve, I know it's not a lot of examples here, but obviously we're going higher. This is a short-term uptrend. And then this happens, right? So you say, wow, okay, we had a nice little uptrend there, but it seems to have broken it. So I guess this is a negative sign. I probably don't want to buy this. I don't want to sell it. I just want to stay away from this because the market doesn't know what it wants to do, right? Well, that's not true. Let me show you how simple it is with our platform. On our platform, the first thing you want to click on is buy sell line right here in the upper green strategy tab. These are all our strategies and techniques in green right here. Here's the one you want to do firstly. That's why we put it on the upper left-hand corner. Click on buy sell line. This drop-down menu appears, and here's the 50-period moving average. We have 4 different categories for viewing the buy-sell line. Let's just use the simplest, which is the 50-period moving average. And once we apply that, we ask ourselves one question. Where is price in relation to that 50-period moving average? If it's below, that means we are only going to be a seller. But what are the majority of price bars closing? Where are they closing? Above? Yeah. Even though we had some intraday trading below, where did we close? We closed above. So this is telling us the overall trend is still up. Unless we have 3 to 5 closes below, the overall trend is still up. So it would be okay if we had 2 or 3 closes below and then immediately shot back up. But we haven't even had 1 close below. Now, let's say through your studies, you say, okay, I've taken the course. I know what the rules are. It's a very simple method, and I think there's a buy strategy, a buy signal here, okay? So what you would do is to check your work, because we teach you how to check your work, click on strategy number 9 in the green strategy tab. The drop-down menu appears, and click on signal arrows, okay? Now, once you do that, you will be able to check your work. Now, you were right. This is a valid buy signal. See, this is how we devise the platform for you to trade and to learn and educate yourself, because I'm not going to be able to be there with you 24/7. If I could, I would love to. I would love to be sitting right next to you and say, okay, let's study this and see, is this a valid signal? But because I know I can't, we devise the platform, and it's enabling you to check your work and to see if you're learning and progressing. So this is a valid signal. You can decide to take this if you want. And it was a nice one because a week or two later, 25-point gain to the upside. Potentially, you could have captured 25 points. You see how simple this is? You didn't have to look at any earnings. You didn't have to listen to what the institutions were doing or what the volume was. You didn't have to, look and see what the guys were saying on TV. Remember, this is the way 99% of all traders trade, myself included when I first started out. And I couldn't make a dime using all these things that were supposed to help me make money. Once my mentors taught me the most important thing was to simply focus on the chart in front of me and to only apply a few simple things, that trading would actually become more consistent. See, trading is not about adding more and more things to your trading plan. It's about really stripping away those things. My mentors called this useless noise. They said it's all just noise. There's no reason to use those things. Earnings, economic reports, fundamentals, institutions, big banks. Now, remember, we're not here to tell you how not to trade. We're just trying to inform you with things that have stood the test of time. So it's not my job to tell you not to look at those things. But if you're asking me if it's required, no, it's not. In fact, I stopped looking at earnings. I stopped looking at economic reports, jobless claims. I stopped looking at that stuff. I stopped watching TV for guys on TV telling me what the market's doing 40 years ago. So if I'm still here 43 years later, don't you think that, you don't really need to look at that either? It's up to you. You can make your trading more complicated or you can simplify it. All right, let's look at this example here in YNDX. Once again, let's examine and see how most traders, once again myself included, because I'm not taking myself out of this game, how I would have analyzed this years ago. I'd say, well, okay, we're kind of going sideways, but you know what? I looked at what the institutions are doing. That's major support. It's being confirmed by the volume. And look at, after we hit this little bottom here when the institutions and the buyers came in, this was actually a Fibonacci support as well. And on top of that, look at, we're starting to bounce. Look at all the days we've closed higher, okay? So let's see if I was right. Let's click on the buy-sell line. We apply the 50-period moving average. And where is price in relation to this? It's below. So I don't care if there's major support there. I don't care if we've been closing higher for the last week. We are below the 50. So rather than looking at this from an opportunity to go long, this is actually an opportunity to go short because the overall trend is down and I don't want to buck the overall trend. I will have a higher level of consistency if I am in sync with the overall trend as to trading against it, which unfortunately is the way we're taught, right? So, okay, so now that I've learned this valuable lesson, now I start applying the requirements for a strategy number 9 signal, and I think that there's actually one generated. So to check my work, I click on strategy number 9 because this is a pullback. This is not a rally. I click on strategy number 9 tab, click on signal arrows, and guess what? Not only was there one setup, but there were actually two. So I have two choices to go short. Was that a good choice? Well, 7-point drop the next day. How did I know it was going to drop 7 points? We don't know. I mean, we're not a predictive company. We never predict how high or how low something will go. We only listen to what the market is telling us. Now, if the market tells us to sell, it could go down maybe a couple of points. Maybe it could go down 20 points. We don't know. In our course, we give you different exit points and different entry points and different stop placements so that you can choose how you want to trade. Remember, the main thing is you have to be in charge of your own trading destiny, not us. How many times have you bought a program or some type of software where it spits out and tells you what to do? That is a recipe for disaster. We teach you, even though we provide you with these educational arrows, we teach you first what to look for. These are only meant to be used as guidance points so that you're learning the process. Once you really fully understand it, there's no need to even look at the arrows anymore. You will know just by looking at a few requirements whether a signal was generated or not. You won't even need the arrows. I don't use the arrows myself because I know when a signal has been generated. I want to get all of my students to that point as well. All right, remember we talked about buying low and selling high. This is where students have a difficult time. They say, Steve, these are the examples where you tell us to stay away from. We should always look at this to go short, right? We shouldn't buck the trend. That's true. But we have to find out what the trend is prior to making that decision because many times we could be wrong. So we add the buy-sell line and we see that price is above. Even with this sell-off, price is above. So what is the overall trend? The overall trend is up. This is simply a sell-off within the overall trend. So that's a buying opportunity. Now, if you apply the requirements to strategy number 9, you see that we had a cluster of buy signals. 1, 2, 3. Some are better than others, obviously. But look what happened. 8 points after that. Where you thought the market was falling out of bed, that was actually a sign, generating some nice signals for you to take advantage of. How about urban? Okay, well, we have a little sell-off here, which had a nice run, but now we have a major sell-off. So, someone could say, Steve, I'm not sure I want to buy this. This is a pretty strong sell-off here. Look at 1, 2, 3, 4, 5 days. If you conclude this one, 5 lower closes. Well, we had the buy-sell line, and we see that the majority bars are above. These are not selling opportunities. These are not anything you should be running from. These are things you should be running towards because they're buying opportunities. Why? Because you're above the 50 or the overall trend is up. So where someone would have said this was a sell-off, this was actually a pullback and it generated a buy signal right at the very bottom. You could have taken advantage of this nice week or two rally that generated 5 points. And now if you exited using one of our many exiting points and you're looking for another setup, well, rather than run away from this, you could have taken advantage of this pullback. Another buy signal is generated, actually 2 buy signals are generated. And another 5 points potentially you could have captured. Let's look at Netflix, okay? Now, someone in August, this was last summer, would have said, well, you know, we had some bad news come out in this, but look, it seems like we've made some type of short-term bottom. We have 3 up days in a row. I think this thing is going to bounce back. The company's good. You can't bet against Netflix, and I think I'm going to buy some shares here, okay? Was that a good choice? And someone would say, well, Steve, how did you know that? I mean, would you study the company's internal, workings? Are you familiar with the, the CEO, or do you know what's going on with the, the economic report of that specific industry or the company? Absolutely not. I never look at that stuff. I don't even understand that stuff. The only thing I look at is this, the 50-period moving average. You could all start doing that today. You can go back and look at your last 10 or 20 trades and see how you were out of sync, most likely because you were buying below the 50 and selling above the 50. I knew right off the bat that if there was a rally in Netflix, that I would have looked to sell it. Why? Because the overall trend is down. And guess what? Strategy 9 generated some really nice sell signals along the way. Had you taken this first one and held on, coming into October last month, that would have potentially generated an 83-point gain to the sell side. You could have purchased puts. These are really simple setups to generate if you're in sync with the overall trend. And you all know how to calculate the overall trend now, which I just taught you. How about PEP, Pepsi, all right? We have a buy signal generated. It's above the 50. This is where everything looks perfect. Let's say this is your first trade. You become a student of mine, and you say to yourself, okay, Steve, you've convinced me. I like what I've seen. I've paper traded. I'm going to take my very first trade. I'm going to buy the stock, and you buy it, and it doesn't work. At this point, here's where students are yelling at me. They're, emailing me saying, all my stuff doesn't work. I want my money back. This doesn't work. And you lost maybe a total of 3 to 5 points, okay? All right. Remember I said that all strategies, all systems fail. It's okay to have a method that has losses. What's not okay is if you go into a sustained period of losses. What a consistent method is one that's able to recoup them. So rather than run away from your first loss and throw it in the trash and say this doesn't work, you have to remain diligent, because if you weren't, you would have missed another setup, this time a sell. Why? Because we have 1, 2, 3, 4, 5, 6, 7 closes below. That's enough to tell us now that the trend is lower. And you could have taken that next signal and made back all the money you lost potentially, and hopefully some more. This is what we mean by consistency, a 2-step forward, 1-step back approach, meaning the 1 step back is an awareness that you will have losses, but the 2 steps is a consistent method able to recoup those losses. All right, here's the example we shared with you at the beginning of the presentation. Someone could say, well, how did you know this was going up? Well, we don't know it's going up. We don't know how high. All we know is what the market tells us, and we just jump on board. It's not our job to predict what the earnings are going to be. It's not our job as traders to predict how high or how low something will go. It's not our job to predict where the support and resistance is. That's silly. That's just really your ego getting in the way. Our job is to let go of our ego, let go of all these things we've been taught, and just to listen. And we listen to what the market wants to do. We take ourselves out of the game in terms of prediction. We just put ourselves in the game in terms of jumping on board with the market. So how did we know the market wanted to go up? Well, we applied the 50-period moving average. Now, it generated some nice signals right here because we were above. Do you see how all of the bars were above? Now, even though we had 1, 2 closes below, look what happened on this third bar. We closed back above. Remember, I said initially you're going to need 3 to 5 closes below or above to tell you what the overall trend is. So 2 closes below is not enough. All right. So how could we have taken advantage? Well, we apply strategy number 9 and look at the buy signals that were generated on these pullbacks. Potentially, if you had taken this first one and stayed in long enough, that's 38 points coming into the mid to the end of October. All right, another example in TA. Once again, we have no idea how low something will go. We just know what the market is telling us. If the market is telling us it wants to go lower, who are we to argue? We just simply go with it. Our job as traders is simple. First of all, our job is not to predict support and resistance. Our job is not to look for Elliott wave, accounts. Our job is not to try and figure out what the institutions are doing. Our job is not to figure out the earnings. We don't teach any of that. Our job is simply to figure out what does the market want to do. And the easiest way is to apply the 50-period moving average. And then we apply some structure in terms of a strategy. So once we apply those things, we see that we never had enough closes above to tell us that we were going higher. And look at all the sell signals generated by using some structure in the form of strategy number 9. You see, trading is really simple once you take yourself out of the way. And once you let go of all these, conventional, traditional things that really don't work, that's when consistency comes in. All right, here's an example in letter G, okay? Here's the way most people would analyze this. Would say, well, wait a minute, Steve, bearish engulfing pattern, all right? Downtrend. I don't want to touch this thing. If I'm going to do anything, I'm going to be a seller, right? All right. Where's the 50-period moving average? Right here. We have one close above, and this closes, it's hard to see, but it closes just a little bit above. So that's not enough to tell us we're going lower. This should not be viewed as something to sell, but more likely a potential buy setup. It's an opportunity to go long, to buy at lower prices in an overall uptrend. So we apply the requirements of strategy number 9, and we see a signal was generated to go long. Look what happened. What happened to the bearish engulfing pattern? What happened to the downtrend? What happened to all the sellers? It's silly. Don't waste your time on things that show no levels of consistency. You could have made 8 points in 2 days. XLNX, okay? How do we analyze this? Seems like we're just at a range here. But then we look at this and we say, wait a minute. Here's a major Fibonacci support. This is where the Elliott wave support comes in on the wave 4 bottom here. It looks like we're going to make a big wave 5 run up, all right? And we're in a solid uptrend, so I'm going to look to buy this, all right? Once again, this is the way 99.9% of all traders, myself included, this is the way they would analyze a market. What's the market telling us, though? Rather than use our own ideas, what's the market telling us? We apply the 50, and the market's saying that, well, sure, yeah, we're bouncing in an overall downtrend. And remember what I taught you? A pullback to the downside is a bounce in an overall downtrend. So that's a selling opportunity. It's not something you should be looking at as a buying opportunity. So you're happy it's bouncing because you're going to be able to sell at higher prices if all the requirements are met. And once you check your work, you see that you're not in an uptrend, you're in a pullback. So let's look for some structure in the form of strategy number 9 and look at all the signals we have. We have a total of 5 signals. Now, obviously, these 2 didn't work out that well. You most likely would have lost a little bit of money. Excuse me. But as you jump back in, remember, didn't go in the corner and sulk, but got back in the game, you could have made back that loss and potentially made upwards of 12 to 15 points to the downside if you stayed in long enough. Now, let's look at some different time frames and some different markets, because we know not everyone trades daily bars of stocks. There are some swing traders, there are some investors that like to look at higher time frames. So let's look at a weekly chart of RGLD. Now, most traders would say, well, Steve, we've kind of topped out here. We're in a downtrend. I don't want to invest in this or have a swing trade because this looks like it's going lower. Well, we use the same process. Just because we're looking at higher time frame, we don't change anything. Now we're going to apply the buy-sell line, a 50-period moving average, to a weekly chart. And where is price in relation to that? Well, we had 1, 2 closes below, and then we close back above. So that's not enough to tell us the overall trend is down. So I don't care how many down weeks you have. That's an opportunity to buy. It's not an opportunity to sell. And if we apply structure in the form of strategy number 9, we click on the green strategy tab, click on signal arrows, and we see here that we not only have 1, but another buy signal here. Now, had you simply bought on the close, that would have worked out not too well, and you most likely would have had a loss. But you got to get back in because many times the second setup will help to recoup that loss. And I think if you would have potentially captured 54 points, you could have recouped that loss very nicely, okay? Let's look at a weekly chart of OI, all right? All right, not really a lot of information, but all of a sudden we remember that $10,000 class we took for the institutions and all the banks, and they were actually buying right here. And this is a bullish engulfing pattern and another bullish engulfing pattern. So we have a lot of stuff telling us that we're in an uptrend. So we're really bullish about this. This is a good swing trade. We're most likely going to come up to these old highs. So I'm a buyer, right? What does the buy-sell line tell you? Most important thing you should be applying firstly before any analysis. You apply the 50-period moving average to a weekly chart. It's telling you that the majority of price bars are below. This is not an uptrend. This is a pullback in an overall downtrend. This is a selling opportunity. You apply some structure in the form of strategy number 9. You've studied it for the last couple of weeks and you say, you know what, I think there's sell signal here. Click on your work to check your work, and yes, you're right. There is a sell signal. So where most people are thinking, well, Steve, you got to buy here. These are where all the banks are buying. You're going against that because you're listening to the market. There's a lot more consistency in listening to the source of what you're trading, than listening to an outside source, which is unfortunately what most traders do. So we listen to the market. The market tells us it wants to go lower. At this time, we don't know how low. We just know it wants to go lower. And it went 9 points coming into September of this year. Okay? All right. The euro dollar, for all of you currency pair traders here, in hindsight, coming into October of this last month, obviously this has been going lower. All right. How would we have known to sell here and here? These would have been the most opportune places. Well, it's easy. We apply the 50-period moving average in strategy number 9. Based on these first 3 sell signals, you could have potentially captured 270 pips. That's over $2,500 per unit. And then on the second sell signal, 185 pips, close to $1,900 per unit. Once again, nothing changes because we change the market or the direction. That's the currency pairs. Let's look at a 15-minute chart of the E-mini. This was about a month ago in the E-mini on a 15-minute time frame. Obviously, in hindsight, we're going higher, right? This is where most students say, well, Steve, yeah, it's easy to know we were going higher. I want to know back here that we were going to go higher. Well, you apply the 50-period moving average, and you would have known actually right here. Why? Because you had 1, 2, 3, 4, 5 closes above. You know, you don't have to look at what's going on economically. You don't have to look at the, earnings reports. You don't have to, if you don't want to, you don't have to look at anything fundamentally to tell you that the market's going higher. All you have to do is apply the 50-period moving average. You could start doing that right now because the 50-period moving average is virtually on any charting software you have in front of you. So you can start doing this for free right now on any time frame. So I never want a student to tell me, well, yeah, Steve, how did, it's easy to look back in hindsight because well before this nice rally in the E-mini, we knew back here that that it wanted to go higher. Now, how high, we had no idea, but that doesn't matter. All you want to do is make sure that you're a buyer. You're only going to be looking at buying opportunities. And if you added strategy number 9, look at all the opportunities you had. Had you taken that first cluster of signals right there in October 10th, you potentially could have captured 80 points or $4,000 per contract in just 2 days. All right? This is how simple trading is when you cast away what my mentors said was all this useless noise that really shows no levels of consistency and only focus on one thing, the source, the chart in front of you. Okay, so let's review now before I tell you about a great offer we have for all of you attending today. Remember, strategy number 9 is a moderate to deep pullback strategy. That means we're looking for moderate to deep sell-offs in an overall uptrend and a moderate to deep bounce or rally in an overall downtrend. It's designed to trade pullbacks using 2 simple indicators or requirements. It's their relationship to price that helps generate these signals. Now, we're looking to buy lower and to sell higher. So if you're an option trader, this is a really, really ideal method to trade. You can apply it to any market, any time frame, and any direction. The majority of the examples were in stocks right now, but I showed you some weekly charts. I showed you a chart in the currency pairs as well as a chart in the E-mini futures. We have traders who use this on Bitcoin and who also use this with commodities, so it makes no difference. Any market, any time frame, in any direction. Remember, the only requirement we state is that you must paper trade first. It is a requirement with all of our students. And some of our students say, well, Steve, I've been trading for 20 years. I don't need to paper trade. I understand this. Listen, I still make mistakes myself. I've been trading for 43 years. You must paper trade. You have to really fully understand the process, okay? Our edge is consistency. Consistency is an awareness that you will have losses. That's okay. I showed you a couple of examples where you did lose on the very first trade. But I also shared with you how you can recoup those losses many times. Why? Because the method is consistent. That's what you want to look for. Now, we only really have 1 more month left in the year. You owe it to yourself to complete 2019 in the right direction. Why? So that you can start 2020 in the right direction. I know you all made promises to yourself at the beginning of this year that where you wanted to be by November or December, where you wanted to have that extra money to go on that dream vacation, or maybe to buy that car you were thinking about, or maybe to have that add-on to to your house, or maybe just have some extra income coming in. And I can almost state that most of you are nowhere near where you really want it to be. That's okay. I was there too. I totally understand what that's about. But it wasn't until I was really presented these same things some 4 decades ago that my trading started to turn around. I want to do the same for you. Start out 2020 in the right direction. We have a great discount for you today, a great offer so that you can. Okay, we're going to offer you strategy number 9 along with 1 year, 1 full year of our platform. This way you can teach yourself how to trade pullbacks, okay? This comes with detailed video course instruction. You're going to learn all the entries, all the exits, and all the stop placement. Remember, our philosophy is that no two traders should trade alike. Everyone should trade according to their means. What we mean is that, you may see a signal, and if I had one entry, the same exit, and the same stop placement, firstly, I would be taking you out of the game. And what if you couldn't take that trade? What if you thought there was too much risk? You said, well, Steve, I have to risk 5 points on this? I can't risk that amount of money. Or if you said, Steve, this is too slow. I mean, this stock doesn't trade enough for me. I want a lot more signals. Or what if you're the type of trader that says, Steve, there's too many signals. I want less signals. Well, we teach you all the ways to add these different variables so that you can feel comfortable. Remember, no two traders should trade alike. That's why we give you upwards of 7 different entry, exit, and stop placement. And we work with you so that you can decide which ones make you feel the most comfortable. That's how you become a consistent trader, not by blindly following someone else's points as where to enter and where to exit, okay? Now, we also, as I stated, are going to include the PTS Primo Charting platform. One of the great things about this is that we're also going to include the scanner. This scans for pullback strategy number 9 signals. And I know all of you can't be in front of your computer 24/7. So what if you come home from a hard day's work and want to just see what the setups are for tomorrow? Let me share with you how simple it is by using our scanner, which comes included with your 1 year of the platform. All you have to do is click on strategy number 9. Remember that drop-down menu where it said signal arrows? Well, this time just click on scanner and this page will appear. Once you see that, you can click on any data that you want. It could be E-mini futures, it can be Bitcoin, it can be the Dow stocks, it can be something that a basket of stocks that you put together. And then you will click that on, load symbols, they appear in about 10 seconds, and then click on scan. All right? After about 30 seconds, you'll see a series of green or red horizontal bars. That's just sharing with you what the corresponding stock is. A green bar means a buy signal in the corresponding stock. A red bar, I should say, means a sell signal. Now, let's say you had become a member about a month ago. All right, here's some of these setups you could have scanned for. Here's one in SPLK. All right, this was actually just this last couple of weeks. Most traders would look at this without any information that I've taught them in the course, and they'd say, well, look at this, 3 dojis. All right, that's a reversal pattern. Most likely, we've hit some type of a top, and we're going to go lower. And so you buy the puts, or you sell the stock, and then you're patting yourself on the back. You say, boy, I was right. I'm going to make a killing on this. Or if you didn't get in, maybe say, well, listen, you know what? On this little bounce here, I'm going to sell short because it's just a 1-day bounce before we go lower. Well, what's the first thing we teach you? This is not a downtrend. It's actually a pullback because the 50-period moving average, most of the bars are above. We only had 1 close above, which is not enough. Now, if you had scanned on the night of the 15th, you would have seen that a buy signal was actually generated. So you could have taken charge of that the next day, or if you had scanned 5 minutes before the close, you could have seen that a buy signal was generated. And look, one trade just using our scanner could have potentially generated 20 points in the next week. This was generated on the 15th, which I believe was just about a week or so ago. A little bit further, someone could have said, well, look at this example in PAGS. Steve, this is classic uptrend. Higher highs, higher lows. So this is something you want to buy, right? Well, you add the 50 and you say, nope, I don't want to touch this with a 10-foot pole because we are in an overall downtrend. I don't care if we're going steadily higher. This is a selling opportunity. Let's say you scanned for this last October and you saw a sell signal generated on the 14th. You could have potentially taken advantage of that for a 10-point drop in 1 day. Okay? How do we know that drop was going to happen? Most likely they came out with some earnings news or something about the company or somebody downgraded it. We have no idea because that's not one of our requirements. We're only looking at the source in front of it, which is the stock price, and a few simple requirements. Or what about this? It just recently happened again, just last week. Obviously, someone can say, Steve, we're in a solid downtrend here. Look at all the down closes, okay? Every day closes lower than the open. But where is price in relation to the 50? Only one close below, and even though this was a down day, it's just barely closing above. And if you use the requirements of what we teach you, or you could have scanned on the night of the 15th, you would have seen this is not a downtrend, actually just a pullback. Why? Because a buy signal was generated. Had you taken that buy signal on the 15th, 22 points in 2 days, all right? This just happened last week, so we're not cherry picking for the best signals that happened a year or two ago. We're showing you how this could have changed your trading in the last week. Trust me. Remember, as I said before, we only have one more month left in 2019. It's almost over. A year from today, you will have wished you became a member of this course. Why? Because we have a great discount for you, and on top of that, you'll be able to start your trading in the right direction starting 2020. All right, so let's break it down. What are you going to get here? What's the total price with everything included, and a special offer with a special package as well? Normally, if we put these two together and you just purchase them separately, it would be over $4,700, okay? We're not going to charge you that. We're only going to charge you $29.95. You're going to save $1,700 on this discount. But on top of that, we are also including payment plans. So we realize not everyone can come up with $29.95. We understand that. If you want to put down a small deposit, a really small deposit, you can still be up and running with a payment plan. So it's really simple to put that together by contacting Pro Trader Strategies. You don't have to come up with $29.95. For a small deposit, you can be up and running as early as today if you like. All right, you can get all the information to this and start scanning for signals on a nightly basis. Here's how to take advantage of this great offer. All right, if you're interested in putting together a payment plan, I would strongly recommend that you call Pro Trader Strategies. They're my sister site. They handle all the tech support as well as pricing and discounts. They have trading consultants manning the phones right now. You can call them directly at 310-598-6677. Here's the phone number right here. There's absolutely no obligation, so I don't want you to be frightened and thinking, well, if I call, they're going to try and sell me something. No, they're just going to give you information. They're traders themselves. They're not going to in any way ask you to put down money and you have to purchase it. They're just going to give you the information, okay? Now, that link you see at the very bottom is the link that will take you to the information and the sign-up page. If you're ready and willing to jump on board and be a student right today and have my personal email address to contact me, that's the link at the very bottom. Now, that's not a live link, but we have just posted one in the chat box on the GoToWebinar column. So if you're really interested, you want to just jump on board, click on that link. There's more information there. But once again, I would strongly recommend that you contact Pro Trader Strategies. They would be more than happy to answer any question concerning pricing, and they would be more than happy to work together and to give you an estimate on a down payment on a payment plan. And then you can think about it. But here's my only suggestion. I wouldn't sit on this for too long because next week I'm going to give an entirely different presentation with an entirely different, strategy or method, and this discount will most likely be gone. So if you are a pullback trader, someone likes to buy low and sell high, this is the method for you. Really, there's no obligation. Contact Pro Trader Strategies. They can answer any question and put together a payment plan. Now, I promised you I would answer your personal questions right now. So if you have any, go to the question and answer box, type them in, and I will be happy to take the last 5 or 10 minutes answering them. Someone's asking, can this be applied to intraday trading? Yes, it can. I showed you a 15-minute chart of the E-minis, but we have a number of students who use this on 5-10-minute charts of trading stocks as well. And we also have students that trade this on intraday on currency pairs. So yes, remember, as I stated, you may have come in a little bit late. This can be applied to any market, any time frame, and any direction, okay? Some students are asking about the tech support with the platform. Yes, we have a great tech support department. They really, if there's any issues, most likely they're just with the students not knowing how to use the platform. All right, you can use this platform and still have your other software as well. Let's say you have Thinkorswim, or let's say you have NinjaTrader. What a lot of traders do is they use those platforms to enter or to trade with, and then they get all the signals or the learning how to spot signals from our platform. Now remember, with our platform, you're going to get strategy number 9. You're going to get the different ways to view the buy-sell line. You're going to get the up and down arrows. You're going to get the scanner. But this also comes with about 3 or 4 different other exercises or techniques that you can start using as well. So this is a great, great offer. And the other thing I didn't mention, or into detail, is that remember, with every strategy, with every technique that you purchase, you become a student of mine. So you get my personal email address. You can email me whenever you'd like, over the weekend, in the middle of the night, because I know not everyone's in the United States, and I will answer your questions as soon as possible. So you can rest assured that I'll be there with you every step of the way answering any questions. We're not going to just leave you on your own and say, okay, good luck with this. It's all explained in the online course. No, I'll be there with you every step of the way explaining things, okay? No further questions, so I guess everyone fully understands this. My only suggestion really would be to contact Pro Trader Strategies if you have a question. You're all going to get a link to the recording, and I would really recommend that you don't wait too long. And so many students will wait for a couple of weeks. They'll say, you know what? I've had so many losses, and I watched Steve's presentation again, and I'm convinced I got to start out in a new direction. I'm going to take advantage of that offer. They'll contact Pro Trader Strategies, and unfortunately, that offer is no good anymore, and it's gone back up to close to $5,000 again. We don't really want you to spend that much money. We're trying to give you a great way to kick off 2020 in the right direction. So please, if you do watch this video, don't sit on it for too long, maybe a couple of days, because next week we're going to be talking about an entirely different method, okay? As we conclude here, I just want to say thank you so much for attending. I hope you learned a little bit about what we do and our philosophy, and about how we really want to help you become a better trader, how our philosophy is to put the information in your hands so that you don't have to rely on anyone or anything else, so that you ultimately can be your own boss and make your own trading decisions. In my 43 years of trading experience, this is the only way one can become consistent. So that's what we're trying to do. That's our concept. That's our philosophy. And we really hope that you come on board and become a student of mine and a member of the Strategy Number 9 course. Thank you so much for attending. I'll see you next time. Bye-bye.